Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's begin with the query segment. And first query that we've got is from Hanumantaraya Gaura. He's saying, sir, can you please help me with M&M Financial shares? It's not moving at all. Kunal, what's your view on this particular counter? I think Mr. Gowda is holding some shares of M&M Finance. He's not, however, mentioned the quantity of shares that he's holding. But what should he do? How are the charts looking for M&M Financials?
So I think, yes, there's reason enough to probably expect that maybe the stock would remain sideways from a short-term view. The last 2 months, the stock has been absolutely sideways, 155 or 152 as the lower end of the range and closer to 165, 170 as the higher end of the upper end of the range for the last 2 months. The long-term averages have also plateaued out for M&M Finance. But remember, I think there is a phase when the market remains very well. There is a phase when the market remains sideways, and those are the kind of opportunities and times where you need to hold your positions, especially if it's a quality stock. So I believe that you should not be worrying about M&M Finance, even if the stock is consolidating for the last 2 months. Sometimes these consolidations are good opportunities where traders tend to participate and tend to average out if their cost prices are higher. So I think if that's the case, you should also act in a very similar manner. I would suggest to hold on M&M Finance even from current levels. And once the breakout is over, I believe the stock can head back towards at least a 185 to 195 over the near to medium term.
Okay, we've got a question, Kunal, from Sudeep, and this one's on Coal India. He's bought at levels of 250, and he's asking if it can be averaged at current levels, and any short to medium term spike is expected, is what he's wondering.
I think for Coal India, in fact, I was looking at the charts over the weekend as well. The stock holds potential for a short-term rally, but the question is that if your buy price is at 210, even if you average approximately at current levels of 150, 149 approximately, then your cost price would land up, say closer to 175, 180ish, depending on the quantity in which you average out. But I think for that also, for the stock to come back towards 175, 180, it would frankly require a very Herculean task. So the question over here, which you should be asking is that if it's a very short-term oriented kind of an opinion, then you may play for maybe 5, 6, 7 rupees on Coal India, say towards 155, 158 kind of a target range. But if you're looking at it as an averaging opportunity for medium term to long term, then I would suggest an avoid. Then I would suggest that you look at some other names. I think something like Maruti, for example, at current levels looks extremely attractive, and Tata Power also looks extremely attractive. And there is a possibility or a profit potential which you can get far more greater than what you can probably earn in Coal India. So depending on your time frame, I think you can probably look at both of these alternatives which I mentioned.
This one is from Bharat saying that he wants to buy Bansali Engineers Polymers at current market price for the next 4 to 5 years. Wants to know how this particular counter looks. Vijay, how does Bansali Engineers Polymer look? Do you track this particular counter?
Yes, I do. And I think that this company, if you look at the overall picture of this company, I think it has been doing well. And even at these levels, I think that it's not overvalued. So he can pick up the stock, but should wait for a correction. 170 odd would be a great level to buy it into the stock. One thing I would like to mention here is that it is still trading at a very nominal price to earning of 8.8. It is not at all overpriced. So I would say that just wait for a correction to get into the stock. 170 odd would be a great level to get into the stock, and my personal target for this stock is about 250 if somebody holds with a longer term perspective. So just wait for a correction and then enter.
We've got a question from Akash Raj, and this is for you, Vijay, on the sugar space. He's specifically on Sri Renuka Sugar. He's bought at levels of 44. The stock is at upper circuit from what I can see today at 45.5. My question to you is, if it's a fundamental reason for buying this counter, would you rather prefer a mill from Uttar Pradesh, considering they have the different sugar yield over there, the better sugar yield and the guarantee of production because it's not dependent on rainfall?
Well, you have made a very pertinent point, Alex. And I think that if somebody looks at the fundamentals, just the fundamental picture of the company, the company is having a negative book value. There is a huge overhang of debt. And whenever you're getting into sugar companies, I think that north-based sugar companies are any day better than south-based sugar companies. But this is also a fact that in the last 4-5 months, we have seen a stupendous rise in the sugar stocks. And if at all you get these stocks in a correction, I think that there are a few stocks I would like to mention. Dhampur looks very good. Balrampur Chini looks excellent. There are two stocks called Awadh Sugar and Magad Sugar, which are primarily Birla Sugar companies. So these are again excellent companies to get into. But again, get in a correction. Don't just jump into right now and start buying sugar companies. So I would say it's a great space, and post the ethanol policy, these companies have become more attractive. And I think we are going to see a bull run in the sugar space for at least 2 to 3 years, and these prices are going to further bolden up. But again, I would say that whenever you are buying, whenever any investor buys, just wait for a correction to happen, buy it into a good company. Let me tell you, even the south-based companies I would like to mention here. I like two companies. Pawnee Sugar Erode is one company I track, and the other one is EID Parry. So better than getting into Renuka, you can get into a EID Parry, which is a Murugappa Group company, and Pawnee Sugar, which still has a EPS about 35. So with such wonderful companies which do make money and have positive book value, positive EPS, so why to get into frenzy stocks like Renuka, where even the book value is negative? So don't just do some research, I would like to recommend, and wait for a correction to enter into sugar. I like sugar with at least 2 to 3 years perspective, but I am still waiting for a correction for a fresh entry.
Right, this one is from Tarun. He wants a short-term view on Jubilant Pharma. Kunal, what's your take on this counter? How are the charts looking for the short term?
So I think the short-term charts are looking a bit wobbly for Jubilant Pharma. That stock has corrected from, I think if I'm not wrong, some 885, 900 levels to current levels of 729. The reason why I say it's a bit critical on the short-term charts is because till the month of April and May the stock was trending up higher, and all of a sudden from those May highs of 885, 900ish, you see a sudden reversal, almost like a V-shaped reversal coming into the stock prices. Now that generally happens when there is an anticipation of some sort of an event or negative news flow, etc., which could be surrounding the stock price. So when you are into such a kind of a trend where it was earlier looking strong and all of a sudden you see a sharper correction, which means that the pain is still left into the stock, and you might see the stock trending lower from a short-term basis. So I would suggest an avoid at current levels, and would watch out for more correction. At least another 5 to 10% corrections from current levels would not be ruled out in the stock.
Coming back to you on Zensar Technologies, it's had quite a run in the year-to-date period, particularly over the last couple of months, and it's up year-to-date about 45%. We've got Padma, who's got 200 shares of the company, but she's not told us at what level she bought it. She's thinking of adding more at current levels. Should she consider doing this, or should she consider adding some other IT company?
I think, Alex, as you've seen that many of these IT stocks have done phenomenally well. Zensar Tech is a stock which is very, very similar from 63, 64 rupees. The March 2020 lows, the stock is at 240 rupees plus, which means almost an average multiple of 5.5 times into the stock prices. Now, when you see such kind of a strong return on in the last 12-13 months, there are two very important observations which every viewer has to take note of, because it's possible that many of these stocks which give you 5x, 7x kind of returns in a very contracted kind of a time frame, these stocks, they can have a tendency of going through a lull phase as well. So what could probably worry investors, all those who are buying the stocks at current levels, could be a prolonged time corrections into these names. So if you're ready to hold on to these names and not worry about the time criteria, then I think it could be a good bet at current levels. And the second important point is, you typically see such kind of a V-shaped rallies into stock prices which tend to alter or change their long-term charts. So I think in both of these aspects, I'm very bullish on the IT stocks overall. But the only cause of concern is that if you're okay to hold on to it, at a time when there could be a prolonged pause into the stock price trends, then I think it makes sense to invest into these names.
From Vikash Mishra, saying that he has Lupin shares which he's purchased at 1,188 rupees per share, but he's saying it's under loss. Is it recommended to hold? And if yes, Kunal, he wants to know what sort of a target should he look at for this particular counter. Also, he wants to know if Sun Pharma is advisable to buy at 681 rupees per share. What's your view first coming in on Lupin, Kunal?
So I think the advice would be that you can hold on to Lupin, but if you want to add maybe some other flavor into the pharma stocks, see from the large cap space, yes, Sun Pharma looks to be quite a formidable name. I'm not sure that whether it's been one of the best performers from the March 2020 lows as compared to rest of its other large cap peers. But yes, there is always a hidden potential that many of these underperformers, they can try and outperform when the wave or when the second wave of sector uptrend begins into these stocks. So there's always a possibility that large cap names like Sun Pharma, etc., they can probably try and play a catch up. But the second stronger point is that if you're looking at it as a more of a medium term play, then why not look at more of the mid cap category, mid cap end of the stocks, where there is a stronger potential that these stocks can give you stronger returns. So something like maybe a Cadila Healthcare at current levels of 635, 640 approximately, a Glenmark at current levels looks extremely attractive. Oro Pharma, I think a stock which was in the thick of news last week as well, looks extremely strong in terms of potential breakout on the upside over the next maybe 1 to 3 months, if not more. So I think I would recommend these kind of a slight high beta names from the pharma pack, and Lupin, yes, you can look to average even at current levels.
Okay, we've got a question from Parth, and this one's for you, Vijay. This is on Goodyear India. And Parth, you've asked 3 stocks. We only take one, so I'm choosing Goodyear. Would you say that this is a good stock, Vijay, to enter, or would you prefer another name from the tire space?
Well, there are certain thoughts about Goodyear. This stock, if you would have asked me a couple of weeks back, I think that it was a fantastic buy at around 960 odd. It has come up considerably, 150 odd rupees. Wait for a correction if you want to get into Goodyear. Again, it's a great company. I hail from a city called Faridabad, where Goodyear also has a plant, and what I learned from local sources that it has been running 3 shifts since the entire lockdown. So especially the tractor tires. So the company is doing well, and the numbers have been good. It's an international company, zero debt company. So get into such a stock in a correction. Vis-a-vis, if you ask me what is my pick, I think that CEAT, which is also a RPG group company, it has shown very good consolidation at around 1300 odd levels, presently around 1350, 1360. This can be bought into at these levels. And I recommend a target of 1800 odd on CEAT, which is again a very good company. There's a small cap company called Birla Tires as well. So this company was into Keshoram, and it has come out of Keshoram, which is a cement company. They have demerged the tire unit. So Birla Tires also is a very good stock at 30 odd rupees. It has a tie-up with Pirelli Tires, which is a global name. It's a very big name in the tire industry. So Birla Tires, if somebody wants to bite into a small cap company, Birla Tires is a good buy at 30 odd. I would recommend a target of 45 on Birla Tires as well.
Okay, this one is from Sarvanan Elango, saying that would like to know the scope of H Kelkar in order to hold it for the next 2 to 3 years. Vijay, do you track H Kelkar? How does this counter look over the next 2 to 3 years if one is to look at buying at current market price?
I would say whoever is there are a lot of questions that whether we should buy it right now. So if at all you are into capital markets, I think that you should wait for opportunities and corrections. So any investor wants to do a fresh buying into a fresh company, wait for a correction. H Kelkar is a good company. It's into the perfume space, and there are very few listed entities in the perfume space, and their perfumes are very widely used, from food to various kinds of stuff which industries use. So good company, great balance sheet, but again wait for a correction. If you get this around 150 odd, it would be a great buy. But yes, wait for a correction. Markets are almost near the tops, and one bad news flow can rattle the market a bit. I won't say there would be a very, very deep correction, but yes, a correction I am expecting, and in this correction, buy quality stocks. H Kelkar is one of those, and I think that if you get the stock around 140, 150, it would be a great buy.
We've got a question from Mayank. Mayank, you know the drill. you got to give us one stock and you got to tell us what your holding period expectation is, whether it's a short-term query or a long-term query. Otherwise, I'm going to have to interpret it myself. You've got a question on Ingersoll Rand. You've bought 500 at levels of 950 and it's currently trading at 984 or thereabouts. Kunal, I'm coming to you for a view on the charts. How does it look?
Alex, and I think on the short-term charts, again, the stock which has rallied up, consolidated, still trading above the long-term averages, the 50-day moving averages. So there is a process of time correction which is happening to these names. So time corrections can play out in two manner. Either the prices go through a correction when they can come back to their long-term averages, or the prices can take a bit of a pause where the averages then naturally rise up and they correct and they come back towards the prices or very close towards the prices. So the latter is actually happening for a stock like Ingersoll Rand, and I believe that that's a good signal that the stock is still holding on to whatever the trend which was started, I think 3-4 months back, I think in the month of March and April for the stock. I would suggest a hold on the stock if you are holding at current levels. And in fact, you can look to average as well if the stock happens to come back to that 900 mark, which could also be a double test of the 50-day moving average.
This one is coming in from Divya on KRBL. She's purchased about 50 shares of KRBL at 227 rupees per share. Wants to know whether she should continue to hold on to it or should she go ahead and book the profits. Kunal, what's your take coming in on KRBL? What should Divya do?
A very strong breakout, which I think the stock has shown today. Last 4-5 months, what was actually happening for KRBL was there was a huge amount of accumulation for the stock, but somehow the stock was not going through a potential breakout. So every time it looked very strong, but it was not giving that kind of a breakout. But start of this week, today specifically, I think the stock has finally managed to give this multi-month impending breakout, if I can call it so. So I believe that this could be a start of a strong uptick move for KRBL, and if the volume potential is something to go by, then I believe that there should be at least another 15 to 20% upside over the near term for KRBL. So I would suggest a hold on at current levels, and if you can extend your time horizon for the stock from a couple of months, then I believe possibly another 15 to 20% on the upside could be looked out for the stock.
Okay, we've got Snehashish on Graphite. Gentlemen, I just want to point out we've got another few minutes. Let's try and wrap up as many questions as possible. Snehashish, Vijay has got 50 shares of Graphite and very close to the current market price, and we've seen a sharp rally in the counter in line with what we've seen in the steel counters. Should he hold on? He's bought at levels of 667, or should he exit and move to something else?
No, I think that on charts, technically speaking, and as a view on the industry, I'm fairly bullish. So charts look good. It might take some time. The stock might consolidate around here, but I think once it starts moving, it has the potential of going up to 800 odd levels. So just hang on to the stock.
Coming from Sagar, he wants a technical view on Genus Power. He's saying it's a part of a small cap portfolio. He's bought 500 shares at 34 rupees per share for a swing trade and is looking for a 80 plus target. Is it possible is what he's asking Kunal. Kunal, do you track this particular counter, Genus Power?
Yeah, I do track the stock, and I would probably ask the viewer to extend the time horizon and don't look at this as a mere short-term play. I think the charts are incrementally strong for Genus Power, and I think if I'm not wrong, then about that 70-75 levels. So the stock is trading at 68 approximately, but about those 70-75 levels, if the stock manages to give you like a monthly or a quarterly close, it could be one of the strongest close the stock had seen over the last 14-15 years. So this could be a 1.5 decade breakout for a stock like Genus Power. So there could be a bigger trend in the making for the stock, because above when you typically see these 10-15 year breakouts, the stock tends to start a very strong multi-year uptrend for themselves. So I would suggest to hold on to the stock, and if you bought at lower levels, I think you've already built in a good buffer for holding on to it for much higher potential over the long term.
Okay, we've got a question from Neeraj on HDFC Limited. 100 shares is what he has at levels of 2,500, Kunal. Should he hold on?
I would recommend to hold on. Even though the stock is consolidating, it's been a bit of a drag or an underperformer. But these stocks, HDFC and HDFC Bank, if I can club both of them, for example, I think both these stocks have a tendency of going through their own phases of consolidation, and underperformance. But then when they catch up, they tend to influence, a lot of the indices as well, both Nifty and Bank Nifty respectively. So I would recommend a hold on HDFC. And since you bought at 2,500 levels, stock is trading very, very close by. I think you can hold on for at least another couple of weeks for a potential target of 2,600.
All right, the next query that we have is coming in from Magesh on Sudarshan Chemicals. He's bought he has some shares which is purchased at 689 rupees per share. He wants to know whether he should hold the counter or go ahead and sell it. Sudarshan Chemicals is what he wants to know about, Kunal.
So I would recommend some partial profit booking or maybe even a full profit booking at current levels. So there is nothing wrong with the stock price trends as such. The price trends have been quite stable, quite strong. But it's the inconsistency with volumes that's a bit of a worry factor for a stock like Sudarshan Chemicals. So for example, in the last 1 month, there was a period of the stock consolidating and the average volumes to dropping to just 65,000 or 75,000 approximately on an average. The last 2 days when the stock price trends have been quite strong, you've seen the average volume shooting up to almost 15 lakhs to 20 lakhs. Now that's a very odd kind of a behavior where the stock will see more participation only when the stock goes up, and it just doesn't see any accumulation when it goes very sideways. So such are the kind of names which you should keep on trading and keep on booking profits at higher levels and then look to buy them back if these stocks happen to go through a corrective phase.
Okay, we've got a question coming in from Shivakumar on Avenue Supermart, and I'm coming to you on this one, Vijay. Should he buy at these levels is the question.
I have mentioned right away, and several times I've said that this is not the time to buy, especially for new investors, because in the last 1.5 years, what we have seen that new investors have garnered a lot of interest, and there have been around 1 crore demat accounts which have opened. But this doesn't mean you just keep on jumping and buying into stocks. Avenue Supermart is a great company, owned by a great person, one of the marquee investors in the markets. But I would say that wait for a correction. If you get this stock around 2,800 in a correction, great buy at those levels, but do not get into the stock right now.
This one is coming in from Deepak. He has Yes Bank shares, about 23,500 shares, which he's purchased at an average price of 14.59 rupees per share. He wants to know whether it's worth adding more or should he exit this particular counter. He's looking at a 3-year horizon for Yes Bank. Vijay, your view coming in on Yes Bank, what should Deepak do?
Well, I guess that I have given my views earlier as well on the same stock, and not only your channel, various channels. And I think that investors should stay away. There is a lure, and there's a hearsay in the market. Abhi le lo, it will double up or it will triple up. And what is the harm? What is the risk reward? But I would say that if the stock is not performing, there are lots of controversies related to the company, and there is anyway 3-year lock-in period which would end soon. So once that ends soon, people, whatever stock they have, they would dump. So we might not even see 13-14 rupees, which is trading right now. So vis-a-vis, if somebody wants to get into a banking stock, why not get into a Can Bank? Why not get into a Union Bank or even a State Bank of India or a PNB? I think that these are great value buys if somebody wants to get into a banking stock. Can Bank has posted a profit of over 1,000 crores. So when banks, which are public sector banks, which have done away with most of the bad news around them, and they have posted most of the NPAs, and the books are seemingly clean. So why to get into a controversial bank? So I would recommend very, very strongly to all the investors who are viewing, all the viewers, that just stay away from the likes of Suzlon, the likes of Idea, the likes of Yes Bank. I am a strong believer that people would not end up making money in these these companies, even RCOM or ADAG companies, people must have made some money. Some people have made some money, but I don't think that it's a wise thing to get into these stocks. So better get into a most fundamental, strong PSU bank story, which will, give you benefits over 2 to 3 years.
Right, Vijay. Kunal, coming to you on this last question, slipping one in. Britannia is the counter. Soumitra has done his fundamental analysis and he's thinking of adding at current levels. Should he go ahead?
You may look to add at current levels, but frankly, I tend to give less preference to this stock because it tends to have a very low beta, characteristic. And when you typically see a sector which is defensive and out of the sector, if you're trying to pick up a stock which is extremely low beta, there is a lesser potential to get more stronger trading returns. So I would avoid the stock purely on a trading basis. Long-term wise, if you've done your thorough fundamental research, then you can definitely consider on the same. But trading wise, short-term trading wise, I would avoid the stock at current levels.
The end of the query segment. Time for high risk and low risk ideas from our experts. And Vijay, coming over to you first. What are your recommendations for the viewers?
Well, I think that even in such markets, there are great opportunities which the market gives you. And I would like to mention a few. I think that a high risk idea would be Adani Power, which is trading at around 100 odd rupees. It can move up pretty sharp because it has corrected also. My medium risk would be an Aarti Drugs. And the low risk idea would be Ramco Systems, which is trading at around 640. So all these stocks have a potential of going up. But I would recommend that, be with the low and the medium risk ones. No point of, taking high risk at this point of time.
All right. Kunal, coming to you on your high risk and low risk ideas.
So the first stock which I would recommend would be a band, Tata Power. The stock heading towards a very strong breakout. It's almost like a bullish flag breakout on the daily time frame charts. So would suggest the buy with 133 as a potential target near term. Stop loss could be tailed to 120 mark. The second one is a band, Maruti. Now this is more of a slightly positional play. The stock is forming a very classic inverted head and shoulder pattern on the monthly time frame charts. And I think the pattern gets fulfilled on the upside. You could look at potential, strong breakout for Maruti and even a possibility of the stock breaking past quite comfortably about that 8,000 level as well. So would suggest the buy, targets 8,000, stop loss at 75.50.
Yes, miss.
All right, that was Kunal's high risk and low risk idea as well. With that, thank you Kunal as well as Vijay for joining us on the show, giving us your take on specialty chemicals, resolving the queries, as well as sharing your high risk and low risk ideas for our viewers. And moving on, let's talk about Jet Airways. And the Calrog Jalan committee has reached out to employees seeking approval of their compensation offer. Former Jet employees have to answer within 30 days on the proposal, which includes stake in Jet Airways, jobs in ground handling services, as well as cash payments. Utkarsh Chaturvedi is here to fill us in with all the details. Utkarsh, good morning. And what exactly are the employees going to get?
So the proposal by Calrog Jalan committee, as you said, has been floated to the employees. Now they needed 95% approval for this plan to go ahead from the employees. What's in store for the employees? Let's start with the equity stake. Now there will be a trust which will be made of the employees, and the union leaders will be heading the trust, and their 0.5% stake of the current Jet Airways share will go to the employees. Now the management believes that this will translate into a north of 180